With Bitcoin blowing past $125,000 to hit new all-time highs, the most common thing I hear is the ship has sailed, I've missed it. And okay, when you look at the price chart, it's completely natural to feel that way. It looks expensive, it feels like you're too late to the party. You see a price that has rocketed from pennies to over $100,000 and your brain just screams that the opportunity is long gone. But trust me, this way of thinking is missing the real story. What if the party is just getting started? The mainstream media is obsessed with the daily price swings, but they're overlooking the massive economic shifts that are making Bitcoin more essential than ever. And in this video, I'm going to show you exactly why you haven't missed Bitcoin, and I will tear down that flawed too late argument, look at the bigger picture that the smart money is actually watching, and explain why 2025 is such a critical window of opportunity. Okay, so let's tackle that too late feeling head on. This feeling comes from looking at Bitcoin through the wrong lens. You're seeing it as a stock that has already had its massive run up. People feel the exact same way about Amazon. People felt the exact same way about Amazon back in the early 2000s. They looked at the chart, saw the spike, and thought the explosive growth was over. What they missed was that the price wasn't the story. The real story was the revolutionary technology, the internet, that was just beginning to change everything. Bitcoin isn't just another stock, it's the invention of a brand new monetary network. Judging its future by only looking at its past price, it's like trying to predict the future of the internet in 1998. By standing at Amazon stock, by staring at Amazon stock chart, you would have completely missed the digital revolution that was about to unfold. We're still in the early days of a massive adoption curve. Think of it like an S-curve. Down at the bottom, you have the innovators, then the curve sweeps dramatically upward as the early majority rushes in. We are not at the top of that curve, we're just hitting the steep, vertical part of the climb. That feeling of being late is just a psychological trick on our minds placed on us when we look at a chart without understanding the context. Focusing on today's price is like getting lost looking at one tree and completely missing the vast growing forest all around you. To really get why you haven't missed out, you have to stop looking at Bitcoin's price and start looking at the price of everything else. The issue isn't that Bitcoin is going up, it's that your traditional government issued money is actively going down. Your money in the bank is literally designed to lose value. That's not a bug, it's a feature of our financial system. Global inflation, though predicted to cool down, is still a huge problem. In many countries, double-digit inflation is a real threat in 2025, just wiping out the savings of millions. Even in major economies like the US and the UK, inflation has been stubbornly difficult to get under control. This is what happens after decades of printing money and piling up debt. When there's economic trouble, the go-to move for governments and central bank is to create more currency from thin air. This devalues every single dollar, pound, euro already out there. It's a slow, silent tax on your life savings. And this is where Bitcoin's bigger purpose snaps in focus. Bitcoin was built as a direct answer to this broken system. Its most powerful feature isn't its price, it's its unbreakable policy. There will only ever be 21 million Bitcoins. Full stop, no government can print more, no CEO can issue more. It is mathematically guaranteed scarcity in a world of infinite money printing. This makes Bitcoin the ultimate store of value for our digital world, a job gold held for centuries. But unlike gold, Bitcoin is digital. You can send $1 billion worth of it across the planet in minutes for just a few bucks. No permission needed. It's easier to divide, easier to move, and easier to verify than gold. As trust in old school financial system fades, big investors and even entire nations are starting to look for a real alternative. Bitcoin is that alternative, a shield against the debasement of our money. For years, the big argument against Bitcoin was it's just for the internet speculators. The smart money will never touch it. Well, that argument is now officially dead. 2025 is the year that the myth was completely shattered. The smart money isn't just showing up, they're leading the charge. We're talking about BlackRock, the world's largest asset manager. We're talking about Fidelity, Citigroup, and JP Morgan. These aren't niche firms, they are the core of the financial system. The game changer was the approval of spot Bitcoin ETFs. These are simply regulated funds that let anyone with a brokerage account get exposure to Bitcoin, and the money pouring in has been absolutely staggering. In the first week of October 2025, spot Bitcoin ETFs saw net inflows of around $3.2 billion. BlackRock's iShares Bitcoin Trust IBET has been a powerhouse, attracting huge amounts of capital and giving Bitcoin a massive stamp of institutional approval. This is a demand shock unlike anything Bitcoin has ever seen. The money flowing in isn't from small-time traders anymore, it's from pension funds and endowments and corporate treasuries. A 2025 survey revealed that 86% of institutional investors either have exposure to digital assets or plan to allocate funds in 2025. The whole story has changed. Bitcoin is no longer a fringe asset, it's being legitimized as a strategic part of a diversified portfolio by the most conservative players on Wall Street. Its market capitalization recently shot past that of a giant like Amazon, putting it among among the world's most valuable assets, they see the same economic storm cloud as we all do, and they're moving to protect their clients' wealth. So we have the global need for an asset like Bitcoin, and we have the institutional demand shock. The final piece of the puzzle is timing. Why is 2025 so important? Because of a special event hard-coded into Bitcoin's DNA, the halving. Roughly every 4 years, the number of new Bitcoin created is cut in half. The last halving was in April 2024. This event created a predictable supply shock. The issues of new Bitcoin suddenly becomes twice as scarce. Historically, the 12 to 18 months after a halving have been when Bitcoin's price sees its most explosive growth. As we stand here in late 2025, we are over 530 days past the last halving. Analysts who study these cycles have pointed out that previous market tops occurred between 525 and 546 days post-halving, suggesting we are right in the middle of that historical critical window. Now, put it all together, we are in the exact historical window for a post-halving rally. At the very same time, we're seeing a massive unprecedented demand shock from the world's biggest financial institutions through these new ETFs. A pre-programmed supply squeeze is colliding head-on with an institutional demand explosion. This is the core opportunity of 2025. Remember, this is just for educational purpose and no financial advice. And analysts are certainly taking note, with many price predictions for the end of 2025 and beyond ranging from $150,000 to $200,000 and some even higher. But some debate whether the old 4-year cycle still matters now that institutions are involved. The consensus is that this unique combination of factors point to a lot more room to run. So while looking at the price chart, north of $125,000 might give you a little bit of vertigo, the reality is that we're still just getting started. We're in the early phase of Bitcoin's adoption as a global digital store of value. The daily price is just a distraction from the real story. Shaky global financial systems, the historic arrival of institutional money, and a built-in supply code that makes Bitcoin scarcer every single day. The question isn't whether you've missed out, it's whether you're ready for what comes next.